Hey all, welcome back to my channel. I took a little bit of a break. Been searching for a job and honestly not really having very good luck. I'm not getting any rejection emails, calls, anything. It's kind of concerning, but we're still moving along with the stock market. I took out all of my retirement stuff from my previous job. It came out to around, I was there for about 4 years, 3.5 years, and I had about 20,000 in there. I took all that out, put it in my Robinhood account. I did take a pretty big tax hit on it. It was about $6,000, but my thinking is if I take the hit now, it'll be better than taking the hit if I can get this account to grow. And I have changed my strategy quite a bit. I've been watching another YouTube channel, talks about selling puts. It's definitely less risky. If the stock goes down, you end up getting assigned the stocks. It's 100 shares of the stock, but you get it at a pretty good discount, and you just wait for the stock to go back up. And it seems to be working, so I'm happy with that. Let me go. I'm going to go back just to regular Robinhood here. It seems to show a little better info here. So I'm going to go back a month because that's about the time I started changing my strategy. I was at about 23,200, and you can see I'm almost up 1,000, so I'm up about $800, $780 it looks like, to be exact. So the first position I have is this CoreWeave put. I have it's set to expire on the 25th, and it is at the. This is $132 put. So the way that it works basically is if the price of CoreWeave goes down below $132, you don't necessarily start losing money because it has to get all the way down to this break-even price, which is $120. So it's a pretty safe bet. When I do put in the order, I go down to the break-even percentage chance, or profit chance basically, and I make sure that it's at least 70%. And I've had pretty good luck with that so far. I have a Tesla one on one of my other accounts. That's at 270. Tesla's sitting around 325 right now, so and it only goes until the 11th of this next month, so that one should be expiring soon, which is good. Then we'll get the premium from that. So yeah, this is my first position. I'm guessing this will end up paying out. It should pay out about $1,000, and I bought it on the 20th, so it'll just be over a month. There'll be $1,000 hit on that, so that's good. And then I have HIMS. I did buy a put on that when it took the big dive just recently. The strategy basically, what you want to wait for the stock to take a big dive, and then put in your you want to sell your put contracts. So you can see it just recently took a huge dive. I put in a put contract pretty much right at the bottom, so we're doing good there. It's gone back up. I put it in when HIMS was right around $40, so it's up $9. So we should be good there. Once that expires, I should make around $400 on that one. Oh, I'm sorry, about $280 on that one. I didn't have a lot of capital. And then this Oklo one is definitely one that this is a $56 put. Right now it's doing a little better. This morning it was down quite a bit. But if this one expires and Oklo's at $56, this one should make me about $400 as well, $460. So definitely changed up my strategy. Definitely not day trading anymore. I was doing that, which I've as everyone says online, is it's just too stressful and you got to watch it all the time. It's really just not worth the headache. It turns into a job. I want this to eventually be passive income that I can use for just my day-to-day. And that does bring me to another thing I just found out. I found out about these Yield Max ETFs. This one is the one I'm looking at. This seems to be the one that everyone's looking at right now. I mean, there's some other ones with Yield Max that seem to be working, but this is a high-paying dividend ETF, and it's only following MSTR stock. And MSTR has bought into Bitcoin so much that once Bitcoin goes up or goes down, it affects the price of the stock because most of their capital and their assets are in Bitcoin. So, yeah. So this has been going for, I think, just over a year, maybe? Yeah, just over a year. And basically how it works, I'm going to do the same strategy as far as buying the stocks. I'm going to sell puts on it with the intention to get assigned the stock. And if I don't, then I'll just take the premium and go. But if I do get assigned the stock, I'll just keep it because you'll probably get it at a discounted rate. Basically, I'll come into here, sell my puts. I'll probably do either half a month or a month out. You can look and just even just going up one here. I'm looking for the credit here. This is so much easier on the phone, but so yeah. So if this stock goes up to 22.5 or stays even above this $21.05, I'll make a little bit of money off of it. But if I don't, and it goes below this, I'll end up getting assigned the stock at this break-even price of $21, which is pretty good if you look at the month for Misty. Go back out here and look at Misty. Misty, MSTY. Yeah, looking at just the 3 months, it looks like it got down to $17. But even if you get it assigned at $17, this particular ETF is paying about $1.50 per share. So if you end up getting, so say I put in a order for 10 of them. Here, well, let's go here and actually look and see how much it is. So say I did this. Say I did 10 of them. That would cost me, the potential loss is $21,000. The profit would be $1,400. That's if the shares don't get assigned. But if the shares do get assigned, then I end up getting 1,000 shares. And then 1,000 shares, the dividends pays out monthly, and it's $1.50 on, and that's not even on average. I think it's more than that. It's $28 every year, and that's paid out 13 times every year. So, these 1,000 shares every month, you would be getting around between $1.50 up to like $4. I've seen per share. So even if it is just $1.50 per share, if you have 1,000 of them, you're getting $1,500 just for owning 1,000 shares of it, and that's every month. And that's completely passive. So I'm kind of combining both strategies. I'm going to be selling puts to hopefully get the premium, and if I don't get the premium, then I'll get assigned the stock, and then if I get assigned the stock, I'm just going to hold on to it to collect the dividends on it. It seems like a win-win. You get the stock at the lowest price possible, so even if if the stock goes up, you'll also make money on the stock going up. But that's only if you plan on selling the stock, which I don't plan on doing. I do want to collect shares, eventually get to like around 5,000 shares. If I can get to around 5,000 shares of this, that's going to be enough money. Even if it's 1.5, I mean, if you pull up a calculator, 1.5 times 5,000, you're looking at $7,500, and that's every month. So that's, I mean, that would be sweet. So, and that's just completely passive. So that's my plan. It's definitely changed from when I first started this YouTube channel, but I'm finding out that the day trading is just not for me. It's not good for my psyche, and just, I don't know, it's too much stress and not enough gains, honestly. So ever since I did change my strategy, like I said, it looks like I've gone up about $800. We're sitting at let's see. Yeah, I changed my strategy right around here. You can see I kind of just held things, and then once I got the money from my previous job, I started making some moves. So you can see I'm up about $700. Well, right now I'm up $830. It did go way down, which was kind of scary. I was like, wow, I thought my new strategy was going to be good. Then it came right back up. But yeah, as you can see, and then if these all end up in the money for me, or out of the money for whoever's buying these put contracts, I'll make around 1,000 on this one. I'll make 200 on this one, and then around 400 on this one. So I should make about 1,600. This is already calculating in the gains I've already made. So I should be sitting around 26,000 once that's done. HIMS, I do have 23 shares of that. I just bought 23 shares of it whenever it hit that $40 mark. I'm guessing it will probably go back up to around 60. It looks like the recent high was about 64, but as you can see, about 55, 60 is where it was trending before it hit that high. There was it looks like there's some type of lawsuit or something going on with the company, and that's what caused it to dive, but I'm buying the dip basically. So that's where I'm at. I do plan on making more YouTube videos now that I'm back. I did go on vacation, and then I took a little bit of a break, but I do want to keep making YouTube videos, and now that I got a new strategy, definitely want to keep you updated on that. I probably won't make the videos as often because I'm not going to be trading every day, but once these expire on the 25th of next month, I'll definitely be planning to make some moves into these ETFs. I do have a list of ETFs here that you can do this strategy on. They're all pretty high paying dividend ETFs. I'm guessing, or I'm hearing that this ULTY one has made some changes, and it looks like it's going to be a good one to get into as well. It is a lot cheaper, so it doesn't pay. It pays weekly, which is a little bit weird, but I'm still kind of learning on these things. But from what it looks like, just looking at charts online, these all pay pretty well compared to like your normal ETFs that people typically use. So, and they're using call options in order to make money on these. So that's why they're able to pay out a lot more from what I'm reading online. So if you have any questions, though, let me know in the comments. I know this one was kind of all over the place, but yeah, that's where I'm at, and I will see you guys on the next video. Thanks for watching. Bye bye.